I know I've been going for a little minute, and I guess y'all don't rock with me because y'all ain't hit me up and asked me how I was doing or nothing. I feel some kind of way about that. I'm not even gonna lie to you, but it is what it is. We gonna get active, um, because it's probably been about 10 days, and fortunately for me, my portfolio hasn't got any worse, which in fact means maybe it's stabilizing. I don't know. But anyway, without further ado, we are going to be reacting to a video called, what's this? Oh, here it is. My bad. I'm ratchet. The Recession That Will Change a Generation. So without further ado, let's talk about it. Let's see what they got to talk about. And
Recession.
let's get active. All right. See, I ain't as smooth as I usually am, but let's go.
It's the word everyone in finance fears. Since the Great Recession of 2008, the United States has been largely immune from these economic downturns. Outside of the massive drawdown we saw in March of 2020 due to a black swan pandemic, the US economy has enjoyed a golden era of unbelievable returns with little to no trouble. Since 2010, the S&P 500 had a total return of 357%. Those lucky enough to have invested during this golden period have
And they probably lost like 350% of it since then.
seen their portfolios grow well past expert assessments. Today, though, trouble in paradise, a paradigm shift in markets that is making everyone, including JP Morgan, panic. In the last 12 years, investors have had essentially no worries during the epic post-recession bull run. Drawdowns were rare, and when they happened, buying the dip was an extremely profitable strategy. Since 2010, there have been only 3 drawdowns surpassing 15% in the S&P,
And we're already at, I want to say we're getting close to about 20%. So it's getting kind of crazy.
each time they happened, the market quickly recovered to new all-time highs. So given these facts, you have to ask, why is everyone so worried about a recession when the current drawdown is nothing special, at least number-wise? In the past, similar situations have always resulted in a quick recovery. Well, the answer lies in 2 different places, and when you figure it out, you will understand why everyone is panicking. You see, in the past, we had it easy. Each time the market dipped, the Fed was there to protect us. But after years of monetary abuse, especially following March of 2020, the protection is gone, at least for now. The Federal Reserve has a problem it has not seen since the early 80s.
Right. So this whole inflation, the thing about it is the Fed doesn't know what they're going to do, because on one hand, they want to get a hold and control inflation, right? But on the other hand, as they continue to raise the rates, people are going to stop spending. People are going to stop buying houses, and they're going to stop buying houses because the interest rates on a house loan right now is like 5.5%. It's at like all-time highs. So people can't afford to buy houses. So there's going to be more houses coming up on the market because people do want to sell. And if people can't sell their houses, then they got to lower the prices. So the housing market, and we've talked about this, but it's been 10 days. The housing market, I think, is the next thing to start to decline. But we'll get active and see what they talking about.
Severe inflation. And in order to combat the issue, they need to raise rates and cut down on their help. To many experts, it seems that the era of easy money is done, and now the market will need to survive without these supplements and steroids that were being injected into it by the United States Federal Reserve.
And I don't want to keep cutting it off, but the thing about it, because it gets real political with people, and I just don't understand, what did you want the government to do? That's the question I want to ask y'all. Y'all can leave it in the comments below, and I'll respond to it. Because on one hand, if the government didn't supply this money, I mean, businesses would have failed. And I've heard other creators like talking about how the government just gave out money to businesses that were gonna fail. So you wanted the government to give money to only the businesses that were successful? So Amazon should have got money, but the ones that was going out of business shouldn't have? That makes no sense. And then on the flip side, on the other side of it, people were told to stay inside. Like, that's what we're forgetting. Like, most of the stimulus money went to businesses. Let's just put it like that. But the little bit of money that did go to people, it was to help people get through what they needed to get through. It was to help people who were told to stay inside and not work to actually stay inside. Like, we're gonna pay for your groceries and all that stuff. We're gonna, like, there's no one's gonna get evicted during this time. And I just wanted to know what should we have done. You know what I mean? Because we could have went the route of herd immunity and had a ton of people pass away, delete themselves, And I just, I sometimes the government is just people like me and you, and I just didn't see a right way that they could have made this work. It is.
This assumption has caused a sell-off of epic proportions in speculative growth stocks.
ARK
For example,
Investment,
stocks
Kathy
like
Wood.
Zoom have been decimated. From its peak price in October of 2020, Zoom has
Sheesh,
declined
it was like
over
600.
80%. But looking at the S&P 500, you would have a hard time telling just how bad it is out there. Plenty of retail favorites are now a fifth of what they were in 2020, yet the S&P is down only 14%. So what is going on? If there truly is...
Let's see how old this video is. It's got a decent amount of views. May 10th, 2022. The S&P is close to 20% right now. So about 10 days later.
Is a market implosion occurring? Why does this single most important index seem to be holding up okay? If we are truly headed towards a recession, where is the epic drawdown? In 2008, we saw the SPY decline by approximately 50%. What is holding up the markets today? The answer to that question is found at the very top of the rankings. To many experts, Apple is holding up a market that seems to be in shambles. Its stock, while down over 14% from its peak, is the single entity preventing an index spiral of epic proportions.
And surprisingly, people are starting to lose money. I have some friends and family that's in Apple, and they've been losing money. So it's starting to decline as well. Because the thing about a recession is when you go in a recession, no one's buying new iPhones and laptops if they're trying to figure out how to feed their family,
If Apple goes, so does the market, and while its recent earnings call was received well by most analysts, there is increasing concerns about the legitimacy of its report. According to a tweet by Meet Kevin, Apple executives were asked 3 times in the last earnings report to answer how demand from consumers is changing. Apple dodged the question all 3 times. This is indicative of how the rest of the market is behaving as well. Executives can only hide the pain for so long before changing consumer behavior becomes apparent and the real pain begins. It's also why even big banks like JP Morgan are predicting a recession. One that won't happen overnight.
All of the banks are predicting. Bank of America, Wells Fargo, they're all saying that it's going to happen. And it's unfortunate because I don't think anybody wants to WW3 on the way anyways. It's necessary excuses to World War III to make money for government and major businesses. I just believe, personally, who's that? Jay Anthony. I just believe that, businesses is going to make their money regardless. Like they're always ahead of this thing. And the people that are going to lose out is the people. Like I feel like come 2030, what's the saying that they say? You will own nothing and you will be happy. I think that's going to be a real thing. People started buying houses, businesses were buying houses, and the market is getting ready to crash. If they lose a ton of money, are they going to go out of business? Absolutely not. That's what our tax dollars are for. Thank you for your tax dollars, people.
But will likely unfold like a slow-moving train wreck. Take a listen to Michael Feroli, chief U.S. economist at JP Morgan, explain just this. His comments should serve as a warning to all investors.
Let's bring in JP Morgan chief U.S. economist Michael Feroli. Feroli and Santoli. I'll start with you, Michael Feroli, which is, it's hard to imagine that we're having conversations about a recession when we're adding in a tight jobs market more than 400,000 jobs and an unemployment rate at 3.6%. So how do you square that?
So I think the recession, at least as I understand it, the recession narrative or discussion is really about perhaps next year, not about next quarter. I think most people recognize that the momentum in the economy right now is pretty favorable. As you mentioned, the jobs number looking very timely and looking very strong. But as we see these financial conditions tighten, many of what you just talked about, stocks down, rates up, dollar way up, over time, if this continues, then you set yourself up for a scenario where maybe, a few quarters down the line, recession becomes more of a possibility.
So to reiterate on that, because we do have good jobs numbers, and I think what I personally think is, let's say this Charger that I own. Right, there's only a certain, with inflation going up, businesses have to raise their prices, but there's only a certain amount of money I'm willing to pay for this Charger. You know what I mean? Like if you continue to raise the price, you're gonna hit a wall where your sales start to decline. And then especially if you're selling something like chargers and everybody has chargers that can make chargers, there's gonna be some undercutting, and then there's gonna be a situation where you can't raise the price anymore. And if you can't raise the price anymore, then the business has to find ways to cut costs. And usually when they start to cut costs, it's with their employees. So, I mean, I think people are going to start to get laid off. I feel like Tesla started laying people off. Don't quote me on that, but I feel like I heard a YouTuber talking about that.
So as you just heard there from Michael, this all comes down to tightening. The Federal Reserve is expected to raise rates multiple times over the next year, and with that, a couple of things are happening. The dollar index is jumping up to record levels.
And the thing that's so crazy about the Fed raising the rate is, you know who owes the most debt in this country? It's the government. The government is it's like they're in control of raising the rate, and they're going to have to pay more on their debt. And I heard somewhere where we'd have to pay, like, our debt's going to be like 10% of our budget come next year.
A more valuable currency makes imports cheaper and exports more expensive and less competitive on world markets. For American companies, this means a tougher time selling stuff outside of its borders. And with the Fed continually raising rates, the impacts on a wide array of financial sectors are going to be severe. Mortgage rates have already surpassed 5%, and if they continue to rise, there is no doubt that eventually the housing market will grind to a halt.
So that says it was at 7% in 2002. That's crazy.
As affordability nosedives. The fear of stagflation is overtaking the market. The economic phenomenon is a double-edged sword. On one side, inflation, on the other, recession. Rising prices hurt as is, but add in high unemployment and terrible growth, and you have a recipe for disaster. Take a listen to Michael explain further.
So what do you think this is all about? That big rally off the Fed and then the big sell-off off the Fed? Is it about concerns that the Fed's going to make a mistake or not get inflation under control, or what?
Yeah, the reaction seems a little bit sclerotic. I do think perhaps Powell maybe misspoke or was a little too firm in ruling out 75 basis points on Wednesday, and maybe some people read that as not being committed enough to the inflation fight. But I think that's a misreading. I think they'll do what they have to do, but there may have been, some words I suppose he would have chosen differently. But the reaction has been a bit odd, but I would say on net, the fact that rates are generally up and the dollar is up is probably the kind of reaction they want. I mean, eventually, they're not just doing this for the sake, for the fun of it. They actually want to tighten financial conditions and slow down the pace of spending growth in the economy.
So there.
To be honest with you, I'm gonna keep it 100. That's New York slang, which is I'm gonna keep it honest with you. I don't think the Fed has any idea what they're doing. They're just the normal people, and yeah, even experts make mistakes. That's why doctors, they have insurance, because they make mistakes, and when they make mistakes, they get sued. So the guy from The Big Short, wow, I'm drawing a blank on his name. He's actually, since I've seen the 10-year yield coming up, he's actually shorting the 10-year bond yield, and I can't find it. Maybe I'll leave a picture in the community tab. But I took a picture of it because he definitely called this recession. So did Meet Kevin. I got to give him his props. But yeah, and it's gonna continue to fall. So I don't know if it's going to continue for. I would love to continue to start making my money again, but we'll see.
Here you have Mr. Feroli essentially saying that the Fed is lying to us once again. In the last meeting, Powell essentially said that he wouldn't even think about raising rates 75 basis points. This was interpreted by some as a failure by the Fed to deal with inflation. Next week, we will get a CPI reading that will undoubtedly shape the future of this market in the near term. If inflation continues to rage, the Fed will have to make a tough choice. Essentially, what they have to do is simple, yet no one on TV would admit to this. It's straightforward. Crash the economy or let inflation spiral out of control. The dream of a soft landing is disappearing by the day, and soon Powell will have the toughest job in America, engineering short-term pain to save us from a long-term disaster. Thank you guys for watching. As always, please make sure you.
So yeah, I'm not going, what do they call it? I'm not going to go too long with this. That's the recession that will change a generation. All I can say is I don't think we're at the bottom yet. So I got money on the sidelines with all the checks that every time I get a check, I'm leaving some on the sideline. I might be putting money inside broker accounts, getting the days process. It take like 3 days for it to hit your account, getting things ready for me to buy. I still don't think we're at the bottom, so we'll see from there. But anyways, that's all I got for you. 12 of y'all in here. I appreciate y'all rocking with me. Hit the like, comment, share, subscribe before you leave, and I holla.
Dreams has always been vivid. I'm just trying to go get it. Catch me riding